Spar is the last one we're talking about tonight. It's founded by a group of 8 wholesalers down in the Durban area who went into partnership in '63 apparently to start servicing these small Spar retailers. Spar, of course, is a global brand, but we're just talking about the distributorship warehousing in the South African instance. Part of the Tiger Brands group at some point, then it got relisted in September 2004. Market cap there also around the 20 billion rand mark, price earnings ratio of about 18.8, dividend yield of 3%. Daniel, this one's done very well as well. It's got that Tops and Build It division as well, which is liquor and building materials respectively. But it has been one of those that's fallen off most radically this year.
Yes.
So what's the story here? Is there some additional vulnerability?
So I think the major difference between Spar and the rest of the guys is that Spar is mainly, it's a wholesaling business model versus the retail model of the previous guys. So when that happens, you need to some degree to support your franchisees when times get tough. So if you're a ShopRite, for example, and you have significant food inflation coming through from soft commodities like maize increasing or from the rand weakening, you can pull this lever and pull that lever and push that food pricing through. If you're a Spar and you have your franchisees crying because times are tough and they can't push up prices, then you have to help them out and you can't push up those prices yourself as much. That could create quite a bit more pressure when comparing to the other guys. So I think guys have become quite worried about that. Plus you have a larger distribution footprint because you've got franchisees all over the place and distribution means fuel. And if you've looked at the fuel price recently, I mean, that cost is increasing significantly. So I think what you're worried about here is costs increasing and the limited ability of the franchisees to push that through to their client bases and therefore some sort of help from the main division to absorb those costs to some degree.
And my sense of the distribution footprint that Spar has is that it's a little bit oriented towards peri-urban and rural areas, maybe just because of the scale that they operate at and the fact that they depend on franchisees. They've tended to be in secondary towns, which isn't necessarily a huge net positive for the mainstream grocery part, but could be a net positive for the likes of the liquor and the building materials type of thing. Okay, we're running out of time. It's fallen back quite sharply. Cheap enough yet for you to call it hot, or are you still a bit ambivalent?
So I'd say I'm a bit neutral on this at the moment. It's still a bit pricey at these levels, even though it's fallen back quite a bit. So I'd say I'll hold off for now. But it's not a definite not, but I'll go with not for now.
So at around the 114 rand level, you're keeping your eyes on it, but you're not
getting a bit more interested below 110. But
going with not for now. Okay, me too. I'm going to go with not.